Welcome everyone to Vested Interest. This is Shane back for a Stock Pick of the Day video. It is Tuesday, January 28th. Again, really quickly wrapping up the first month of 2025 here. We're going to take a look at Sysco. This is out of the consumer staple sector. And before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. If you are a dividend growth investor, make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that notification bell down below as well so you're notified whenever I put out any new content. I do this Stock Pick of the Day video series Monday through Thursday whenever the market's open. We take a look at a company stock that's pulled back on the day, run it through my screener. We see if it is presenting any undervaluation, and if it meets the screener, it must meet certain criteria, then it makes it onto my watch list. It's also a way that I can check companies in my portfolio to still see if it meets the screener or if I should be concerned and do more of a deep dive. And full disclosure, Sysco is one in my portfolio, so that's part of the reason we're looking at it. Special thank you to everyone out there who's watched the channel, viewers of the channels as well as subscribers. The channel continues to grow because of people like you. There's also the thanks button down below for those of you who may be able and want to buy me a cup of coffee. That's a way you can help out the channel. And let's get back to Sysco. Before we get there, we're going to look at the screener here. You can pause this. This is the screener we're going to be going through in the video here. It must meet 5 of 8 since it's not a financial company. If it was a financial company like a bank or a insurance company, then we would throw in price to book. You can use price to book for any company, just don't use one as the fair value. I compare price to book for companies outside the financial sector to companies that are similar to the company I'm looking at that are in the same sector. So information technology sector, let's say Microsoft, you'd want to compare that to another tech company. Something like Union Pacific, you want to compare to another railroad company, see where their price to book stacks up in comparison to other companies in the same sector. Now back to Sysco. You can check them out on their homepage, www.sysco.com. That's www.sysco.com. That is their homepage where I pulled this information from. The Sysco story. Sysco is the global leader in selling, marketing, and distributing food and non-food products to restaurants, healthcare, educational facilities, lodging establishments, and other customers around the world. And their food and beverage providing food and beverages is really their bread and butter. You can see here a lot of the different products that they provide, right? So if you're going out to a restaurant, it might be to a restaurant, schools, like it says, but meats and seafood, dairy and eggs, fruits and vegetables, bakery and bread, beverages, supplies and equipment, right? So some of the stuff that they're packaging up your food with there, frozen food, canned and dried food, and Sysco Brands family. So they also have their own food choices that maybe, like I said, some of those restaurants, schools, universities may be buying out there and serving you. And again, www.sysco.com. Check them out at their homepage if you want to know more about the company. Now, the reason we are taking a look at them, down to 5.95% of the day, big drop on the day, and that is the story of the week so far. Big drops for a lot of companies in multiple sectors here. Looks like an overall market downturn. Maybe that's the case. Sysco Corporation is who we're talking about, ticker SYY, out of the consumer staple sector, closed out the day at $72.29. 52-week range as low as $69.03, as high as $82.89. They are within 15% of their 52-week low currently. They do have a market cap of $35.511 billion, a beta of 1.20, so they are more volatile than the overall market, and you might be able to use that volatility to your advantage, right? Buying on those dips and running it up, letting it run up whenever the prices shoot up, you can just hold and sit there. Price to earnings ratio, $18.58 per share. EPS is sitting at $3.89 per share. Earnings date was today, so must be something about their earnings report that the market didn't like. Forward dividend is $2.04. They are a quarterly payer, so divide by 4, though we will see that here in a little bit towards the end of the video. Nice starting dividend yield, 2.65%. Ex-dividend date, January 30th, so we are past that. They did pay out on the 24th. I received my dividend last week from this one. Again, I do own this company. I am long Sysco. This is one that I'm looking to add to as well, so I'm glad it's pulling back. 1-year target estimate, at least according to Yahoo Finance, $85.14 per share. So they see it setting a new 52-week high. I am not affiliated with Yahoo Finance, just one of the places I go to for information. Now, jumping over to the right, I like to look at dividend yield theory. To do that, we look at their 5-year dividend yield average of 2.56%. Compare it to its current 2.65%, or over here where it says forward 2.65%, same number. And since their current dividend yield is higher than their 5-year average, that speaks to undervaluation. These numbers are inversely correlated, right? If it's higher, that means undervaluation. If this was lower than their 5-year average, that would speak to overvaluation. So at least according to dividend yield theory, this one potentially is undervalued right now. Payout ratio, I like under 75%. They're at 51.93, so I don't think they're in danger of cutting that dividend. Gives them room to raise that dividend over time as well. Dropping down, I like to look at free cash flow. I want growing free cash flow over time. Typically, if a company has growing free cash flow, their dividend is safe. They can raise the dividend. They can make acquisitions. They can pay down debt. They can buy back shares. All the things that companies can do with dividends, they can raise that over time. Now, going back to June 2021 here, they were at $1.4 billion in free cash flow. June 2022 here, they were at $1.1 billion, which looks like a downturn, but we'll look at the repurchase of capital shares here in a minute. June 2023, they were at $2 billion, so another jump up there. June 2024, up to $2.1 billion, so another jump up there. Now let's look at repurchase of shares. Nothing in 21, but 2022 looks like they repurchased $500 million in shares. So that drop, what appears to be a drop in free cash flow, actually can be accounted for in this repurchase of shares here. Jump up in free cash flow in 2023, plus the continuation of that repurchase of shares, and a big jump up in 2024. They repurchased 1.2 billion shares, as well as the 2.1 billion in free cash flow. So overall, growing free cash flow, as well as pulling shares out of the market by repurchasing their own shares. I like that. Good combination there. Now, jumping over to stockanalysis.com, this is another source I go to for information. You don't have to pick these two. These are just two that I like. You can pick any sources that you want. I do recommend more than one so you can make sure the information you are getting is accurate and up to date. Now, they call this a strong buy out of the 14 analysts that have taken a look at this. That's the consensus. They have a low estimate of $79. It currently sits 9.3% lower than their current lowest estimates at $72.28. So that would represent a 9.3% increase if it came back up to their low estimate. Average estimate of $85.57 would represent an 18.39% increase from where it currently sits. That's pretty close to what we saw with Yahoo Finance on the previous page. High estimate of $95 would represent a 31.43% increase. All the while, you could collect that 2+% dividend yield if you were to buy them now. Jumping over to statistics, I like to look at return on equity and return on invested capital to see how well the company is reinvesting funds back into the company, making acquisitions, buying back shares, paying down debt, that sort of thing. Or they may be even purchasing other businesses, something like that, or investing into the market themselves. But it gives us an idea how well they're using that capital. I like 10% or better for both of these metrics. Return on equity, smoking high, 86.51%, very, very high. Return on invested capital over the 10% I'm looking for as well at 14.08. Now, earnings per share growth is projected over the next 5 years at 13.33%. I like over 5% projected over the next 5 years, so smash is what I'm looking for there. And revenue growth forecasted at 4.89%, solid revenue growth forecast. Again, I am long Sysco Corp. We'll look at my position here at the end. It is a quarterly payout ratio in the 50% range, 52.45%, much lower than the 75% that I like. Dividend growth is slow. I will say that. That's one of the only things that I see wrong with this potentially is the slow dividend growth at 2.01%, which most years is just about what inflation is. Maybe even a little bit lower than inflation right now. Growth at 56 years. Buyback yield is positive at 2.23%. You want to see that. That means they're buying back shares whenever the shares are cheap. And shareholder yield positive at 5.0%. You want to be a positive shareholder yield as well. It means you're getting a good return on your investment as a shareholder. Now, they do pay out on the January, April, July, October timeframe, which is off of the schedule from most companies. Going back in time, June 2022 here, 49 cents they were paying in dividends. Per share per quarter. July 2023 up to 50 cents. July 2024 up to 51 cents. I would say if they're going to continue this raise, it'll be another 1 or 2 cent raise in July of 2025. So tune back in later in the year for that. I'd like to see them increase it a little bit. Maybe 4 or 5% would be nice. All right, let's check out the screener. Understand the business. That's where we started. Again, they sell a lot of the foods that you might be eating out at restaurants, educational facilities, that sort of thing. Growing free, and they ship it. I believe you might have seen some of their trucks on the road, Sysco trucks, right? They say it right on the side. Growing free cash flow over the last 4 years. Yep, growing free cash flow. Growing dividend. It's growing over time, though it is slow growth. Again, I'd like to see them increase that growth. Around 5% would be nice, 4 to 5%. Dividend payout ratio is around the 50% range, so check there. Dividend yield theory says it's potentially undervalued, so check there. It is within 15% of a 52-week low, not under my cost basis yet, but getting close, still slightly above there. Sorry, I didn't think we looked at my position, but you can go back and look at that if you want. I own 117 shares. I'm up slightly. Return on invested capital, return on equity both are over 10%. Return on equity was smoking high in the 80% range, so check there. And earnings per share growth forecasted over the next 5 years is over 5% at 13.3, I believe it was. So check there. One of the rare instances you're seeing 8 out of 8. I did look at price to book. It is not under 1 on the price to book, but everything else looks really good. This one might be one to take a look at right now, especially with the recent pullback. It's just slightly over my cost basis where I bought it about a year. No, actually, it's about 2.5, almost 3 years ago now. Really one that I like. Again, the only thing I don't really like about it is the slow growth of the dividend. Let me know what you think of Sysco in the comment section down below. Love to hear from you. And that is it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. And drop a comment down below. Let me know what you think of the video. Let me know what you think of Sysco. Is it one in your portfolio? Is it one you're watching for more of a drop? Or maybe you're part of the reason it's going down. Is it one you're selling? Love to hear from you. And if you are selling, what is the reason for it? Was the earnings report just too much for you today? I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Sysco you'd like me to cover in the Stock Pick of the Day video series, drop in the comment section down below. I'll work it in the rotation on the day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you're not comfortable with. Always do your own research. Invest based on your situation, circumstances, and select a criteria, or seek the advice and counsel of a certified financial advisor.